Another day in the market today, December 15th, Wednesday. It's a FOMC session. Later in the day, around 2 p.m. New York time or 8 p.m. Berlin, 7 p.m. UK, we will have the FOMC interest rate decision and monetary policy statement. As you see here on the economic calendar, Fed interest rate decision for today, followed by the projections outlook. We will see what they will decide. For now, the expectations are for no change, but everybody is all ears for possible 3 rate hikes in 2022. How will the rate hikes impact the stock market, indices, gold, and other FX pairs? We will take a look at each of them one at a time now. Firstly, since I have gold here on the main chart, let's take a look at gold's pattern. As we have discussed in the past weeks, even on the other video that we made, gold is just following through on this massive triangle pattern from last year. So let's go to daily chart. If I can delete all of the labels that I have on the chart and start from scratch for teaching purposes, some of you like to start with a clean chart. Most of you also that follow, you have already seen this chart before, but let's delete everything and start from scratch and try to understand where is gold trading currently and what may happen in the next few days or even today. So let's start with a clean chart. Whenever you open any market, it is always advised to start from the higher time frame for you to get a bigger perspective on the larger trend. Therefore, we start on the daily time frame and zoom out just to see where gold has been trading in the past months or in the past year. So we see that it's been a clear uptrend since the beginning of 2019, where price broke out of a tough 3-year consolidation right here. That was the first time gold breaking out and rallying immediately after. And now we are having the same kind of consolidation as we did from 2017 to 2019. Look at this pattern. It's kind of the same, similar. It's a triangle. We will go with the triangle pattern up to now. We will stick to this idea for as long as it is valid. The triangle pattern that we are currently at will be invalidated only if we clearly see a strong push towards 1700 area. Then we may think that, okay, the triangle is not valid anymore and gold could be playing out for something deeper, deeper corrective, which will bring the price down to the ninja target, 100%, 1510. So in case the pattern is not a triangle, then gold price needs to break down in the coming 2-3 months, or maybe next year, first 2 quarters down here. So therefore, gold is not a good investment for long-term or medium-term, as long as we have high inflation. Why? We will explain a bit later. But let's go with the primary analysis that we have here. For now in gold is the triangle pattern. Usually triangles are labeled with 5 legs that in Elliott wave terminology, we call them A, B, C, D, E. As it is labeled here. Zooming in a bit on the 4 hours so we can see each of the subwaves. Each wave should be constructed by 3 subwaves internally, either a clear ABC or a complex double ABC, which we call WXY. Anyways, we will not explain Elliott wave patterns in this chart. That's for maybe another topic in the future. However, for now, we have the AC trend line here, could be a barrier triangle. As long as wave C is not broken, then we will continue to support this triangle. And each wave corrects 61% or 78% of the preceding wave. So wave B will correct 61% or 76% of wave A. And as we see, wave B corrected 61.8%. So that is the first one done. Wave C went more. Usually, in theory, it said that 76% should be maximum, but as we see, the closing price of the candle was at the 76%, even though there was a huge wick down here, which was fast enough to be erased, and plenty of buy orders were triggered at this area, or maybe stop orders. So that is our wave C. We go with wave D, which should retrace again 61 to 76% of the preceding last wave. So here you see another wave D retracing 76% of wave B, which again goes according to what the guideline says about triangle subwaves and Fibonacci relationships with each of them. Now we are in the last wave, wave E, which again 76 or 61% of wave D. Therefore, we get our target area for gold very soon in the imminent near future. So that brings us with 1752, 1723 support target. In the past few days, I was expecting gold to test this level one more time and then break down. It could still happen and play out just to trick more traders and fake them into thinking that prices could rally and break out above. Anything is possible. But since we have the Fed today interest rate decision, gold is currently weak. They are selling because it is the anticipation that the Fed may surprise with more rate hikes or ending the tapering program a bit sooner than expected. So that's why the gold price started to decline yesterday strongly. But in case we hold the double bottom, the previous low at 60, gold can do this one more time, trick everybody, and then later on after FOMC, it can drop towards 23, or it can just continue with business, do it immediately, go to 23, and then from there we'll see if it holds. What happens after this triangle is completed? Then the previous longer trend that we have identified on the hourly, on the larger time frame, it needs to resume. Therefore, gold prices should go higher to new highs. Is the scenario realistic for the next 1 year, 2 years? I don't think so with what information we have right now. Why does gold, or how, in which scenario will gold rally and to 2K levels and maybe even more? Gold is a store of value, has always been a store of value, and it thrives during uncertain future periods. It thrived during the corona pandemic, global pandemic. It also goes up against the US dollar in a low interest rate environment from the central bank. So the only scenario for gold to continue to outperform as a commodity, as a store of value, and against the dollar is if the Federal Reserve, the central bank of the US, remains dovish for 2022, meaning they do not change interest rates. So we will still remain in a low interest rate environment, or they increase and make it known that they will increase the rate only once, not very rapidly and not very aggressively, or if they mention that inflation, I will call inflation CPI for short, if they mention that inflation will revert back to 2% within 2022, back to 2% from 6.9. Now is 6.9. How realistic is this scenario? Very low chance of happening. How realistic is the second option? Very low chance of happening. How realistic is the first option? Not at all. So for gold to rally so much, we need all of these three conditions to be met. Or we can completely disregard Fed and the US economy goes into total collapse. The world, something major catastrophic is happening with the stock market and people don't know where to put the money. So they just shift to gold. So a complete crash in the stock market, more than 20%, more than 30%, I would say. This could be another scenario that money can flow into gold. So these are the only two scenarios for gold to rally in 2022 to high prices to 2K plus. If the opposite happens, if the stock market, yes, makes a correction, but does not reach more than 20% or 15% correction, or if the Fed raises interest rate, and because the inflation is so high, they believe that it will continue to be high during the 2022, there is no reason for gold to thrive during high interest rate situation, because during high interest rate environment, the currency of that country becomes more expensive, and therefore gold is denominated and traded against the dollar, so it needs to trade lower. With the information we have right now, the central bank today may be stating again that the inflation will remain persistent for 2022. And we need to act and we need to increase the interest rates or something along these lines. They need to mention gold needs to drop. So I don't see anything bullish above 1810 in gold. So maximum upside for now in gold is the monthly pivot 1803. Nothing more bullish than that for this week. My opinion can change, our opinion can change. It depends on the data that we get from the market. That's why we use stop losses. Otherwise, we would just be completely gambling and picking sides. But if currently I have an idea that gold needs to drop to 720 and 53, then if you short or if you're already shorting, you should keep a stop loss to 85. And then above 85, look for another push to 1803. And from there, we will see maybe 1810 maximum. We'll see what happens from here. But this is the current view on gold. This is the major triangle that we are following. And this is the fundamental talk that can support both scenarios, bearish and bullish. Bearish scenario, this is bullish scenario. For long term, bullish scenario in gold long term, and bearish scenario in gold is what we currently have, is a triangle pattern, wave E. Wave E needs, what's that? Seriously, okay. Needs to finish down to 1750 or 1723 and hold there. An even more bearish pattern or scenario is if not a triangle pattern, but double ABC, aiming for 1510 extension down here on the chart that you see right here. Fundamental talk to support this is fundamental reasons to support this view. One, Fed finishes bond buying sooner than July 2022. Second, Fed increases rates 3 times in 2022. And another is inflation remains high during 2022. So it's completely the opposite of what we mentioned in the bullish scenario. If you want to take a snapshot of this, keep in mind that the intraday levels or short-term trading in gold is very dangerous, and they are always hunting stops. It's best to trade gold on the 1 hour, 4 hour, and larger time frames with small size and bigger targets, bigger stop losses to catch the big move. So right now, if you had shorted, if this with a triangle, if you only played the 70%, 61% buy sell on the triangle waves, B, D, and now E, that would have been much easier than just trading the 5-minute chart on gold, because it doesn't work like the other markets. Every market has their own personality, and we need to adapt. I think I talked too much about gold. These scenarios, remember them because they will be valid for the other markets that we speak. Now we will go to Dow Jones, US 30. Let's delete everything we have on the chart and take a look at the big picture in Dow Jones. Maybe take a look at the weekly. Huge rally here in Dow. The financial crisis to 2008. And now we are approaching the last wave. So this is wave 5. And very soon market can have a considerable top in place, but I don't want to focus on a long-term analysis now. The purpose is what will happen today with Dow Jones index during the FOMC meeting. We know from this chart that we see is that the bigger trend is higher and the previous swing low has held multiple times. Therefore, we are still in an uptrend, and buyers, their only job is to buy dips. They did it pretty well on the last dip. Market V-shaped to 78%, and now it's pulling back again. So if the pullback holds at monthly pivots, we can rally to new highs again. In a nutshell, it's an uptrend by pullbacks. The support has not been broken yet, so nothing to be afraid of. Always use stop losses. Of course, we are not saying, we're not advocates of just buying and hoping, but buy, put stop loss, and if you're wrong, then you're wrong and you move on to another idea. What can happen today in Dow? We'll take a look at the pivot points that we have on the chart. This is the 2-month period price action, which is probably the same area at 35,200, 35,100. Therefore, that's a decent level of support. If we go today, we can look for a buy here. If this level support is broken, then market will probably correct further and try to breach the bigger support area. What will happen to indices if the Fed increases interest rates, or if the Fed makes it known that they will increase more than twice next year? The US dollar will go up, things will become more expensive. The stocks, since the things will become more expensive, the stock prices, the companies will sell less because people may stop, or the demand may slow down. So the company prices can decline, therefore the index usually declines. So in theory, high interest rates translate into lower performance in the stock market and in the indices. So the short-term effect for this event scenario is a decline in the indices short-term, until the market prices this scenario in. If the other components of the economy are going quite well, like the labor market, the retail sales, if they are booming as they are now and unemployment rate is declining, then we have all we need to assume that the economy is doing well. There is no reason to fear. Therefore, the high interest rates scenario and the low prices will be reverted, and people will buy again the dips in the stock market. So the only fear right now in the stock market is the inflation. If it does not go back to low levels, or if there is no sign of declining, if every month it continues to rise, then that will be problematic and can cause a shock in the stock market or people's psychology. But inflation probably may get subdued in 2022 once the supply chain problems are resolved and once the demand slows down, because right now we have huge demand. People are spending a lot of money from last year during a lockdown, and all of that demand now is causing a demand shock, and businesses cannot provide what is needed. There are delays in supplying everything that consumers need. So it needs some time to go back to normal. That's why the inflation spiked so much. There is a nice article from the European Central Bank itself to explain for dummies why is inflation so high, what impacts inflation. Usually there are three reasons, and they mention in here that inflation goes higher currently because the economy reopened very fast. Prices of energy increase substantially, and also the base effect. Now, the base effect means that last year was low, this year is high, that's why it's high. But next year it can be low, so next year we will say that inflation is low. Why is low? Because last year it was high. So it just depends on the rhetoric or the comparison time. But the most important elements are the high energy prices and the reopening of the global economy. Most countries opened so fast after being locked down for more than 1 year. So that's why it caused the supply chain problem and huge demand. And these two forces did not reach an equilibrium. If everything follows the textbook and the script, then inflation will not be a big problem. By probably September, autumn next year, things will tend to go back to normal, unless the shenanigans create another chaotic environment with the virus, or they invent something else that could lock the global economy again into a lockdown or something extreme. All right, Dow Jones for today, buy dips, that's the plan. For very short term, if we take a look at the value, very short term, value charts in Dow. I'll not explain this because it would take another 60 hours to explain, but these are levels in Dow. For now, we will look for a buy as long as above weekly pivot, for a scalp higher. If the support level does not hold and it breaks, then the market can tank substantially to our area here, 35,100, which we want to buy again, of course. The only scenario for Dow to rally substantially if it breaks this resistance at 35,800, then we can look for new highs immediately after the FOMC. The same story is for Nasdaq. Let's delete everything. Nasdaq has had a good chance yesterday to do this pattern, but apparently they had different script on their agenda. Therefore, looking for a deeper correction in Nasdaq. I'm not bullish at all in Nasdaq for today compared to Dow. I think that the pattern here will be a bit more complex, and we need to look for ninja target 100% to be met. Therefore, any bounces in Nasdaq today could be seen as a short opportunity for a retest of November's area, or even a bit lower. So I'm not bullish at all in Nasdaq unless it clearly goes back above 16,200. So if Nasdaq goes above the monthly pivot, which is our resistance for the entire week, I'm looking for, probably this could happen. Push it, take some stops, and then later on crack it back down. This could play out. Anyhow, stops will be placed in each scenario we play. We may play the long from here to up here if that happens later on. And then we can take a short here and look for a hold and stop loss above. So it depends, but this is the current situation and pattern in Nasdaq. Overall trend is still quite strong. Buyer's market. We made a new high. And we retested the previously broken resistance, now support, which held. Now we may go there for a second time. If we hold again, that would be a stronger signal to make higher highs. So that, I think we need to wrap it up for today because it went a bit longer than expected. We only discussed gold, Dow Jones, Nasdaq, and 2 scenarios for the Fed and the fundamental topics about inflation and what could happen. For any other questions that you might have about these analyses or what kind of tools we use, just make sure to contact us via the website. Or if you are already with us on the Telegram channel, just pop me a message there. And good luck today. We'll hear again next time. Bye.